Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we have a marginal change with new all-time highs made, but you see here in on the daily chart that the market is finding balance up here at these new levels, and obviously this is a direct consequence of the high risk events that we have starting tomorrow. Nonetheless, there was an exploration at both sides of Monday's profile, and the market settled just within one tick of Monday settle. So basically, the market is up there, accepting the levels and waiting for more information. We continue the extension higher, but as I said, I would say that the market is in a wait and see mode, judging by the price action. You can see here in the continuous chart that this is Monday's activity. Then overnight, a little bit of an exploration down during regular trading hours, exploration up, and we ended up with overlapping value and a very close POC to where it was overnight and yesterday. So if you look closely at the market profile, you see that there was a lot of back and forth. There was an immediate probe lower at the open, but found good response and held the Monday's low, and the gap closed a little bit, just a few ticks, but immediately pushed back in. But as I said, with the market being very cautious ahead of the risk events, the probe outside into new all-time high territory was quickly rejected. Obviously, I understand. I mean, it's logic to me that nobody in its sane mind will commit ahead of the FOMC and non-farm payrolls. Anything can happen. So market immediately went back in very aggressively and consolidated there. There was a little bit of liquidation at the end. Perhaps the market got a little bit too long here, judging by the accumulation of periods around Monday's high, not being able to extend to the high side. So there was a little bit of liquidation, but nonetheless, I would call it an overlapping market finding value up here, overlapping value, very close POCs. So we look forward to what may happen tomorrow. Focus for tomorrow. I mean, now the focus remains, shifts. It doesn't shift. The focus is in the same place, but now it's updated. And I would say that the focus is on this 2-day range, 2-day balancing range. Obviously, acceptance below today's afternoon low will immediately bring into play the gap, and definitely acceptance above the afternoon high at 44 will bring into play Tuesday's high, and definitely acceptance below this level increases the odds of further upside. I would say that another important thing to keep an eye on is on this 200 moving average, which is now sitting at around the 30-20 area. I think there's a good chance that by the time the FOMC comes, it will be sitting somewhere around the 24 area. That you can see is the next consolidation that we had, that we have to the downside, and it's where the break found acceptance last Friday. So this area definitely an area to look for if we break lower and we close that gap from Monday, and it could give some support. If you go past this area and that moving average is there and you get acceptance below, there's a chance for a correction. And the next reference I have there is the 30-15 area, which you can see was the previous resistance. Again, anything can happen. I don't expect a lot of activity tomorrow morning. For that reason, I'm going to post the briefing tonight, but tomorrow morning I'm going to come late in the session towards midday Central Time ahead of the FOMC. I'm going to try to do a brief tweet just stating where the market is standing at the moment before the FOMC. I expect volatility to spike just after that. So be patient, keep your powder dry. There will be a lot of volatility. There will be a lot of information hitting the market in the rest of the week. So there will be plenty of opportunity. Anything can happen. Trade well.